Hi, Steve here. Wanted to do a quick video on the introduction to the strategy settings for the NinjaTrader strategy. That name may change. We've been discussing that, but as it stands right now today, that's what it's called. So without further ado, oh, by the way, I trade on Ninja Renko bars. A little different than the Ninja standard Rankos. They are free. I could actually show you where they are. If you go to the website, you can go to free stuff. And right there, the very first one is the Ninja Renko bars. And those are free. If you click on that, it'll take you to Ninja Renko or Ninja. And then they'll ask you for your ID. They'll email you a password. You can get in there, download them for free. And that's what I use. There's and behind the scenes it's used a lot, so they do go hand in hand. Doesn't mean you necessarily have to always use these bars, but a lot of the things behind the scenes are based on that. So I haven't done any testing outside of these. So without further ado, what I'd like to do is go into the settings, and just what I'd like to do is do an orientation strictly on each individual group, and I want to keep the videos small, and so therefore I'm just closing these here now. So these are all the settings for this indicator, and you could see all the ones that have groups are the groups that belong to here, and the ones that don't are just in standard Ninja defaults that we don't really change too much. But I'm using today, I'm doing this video, this is version 1.212, dated today, and that's really it for this orientation. What the only thing I would like to mention is in group 2, these here, they're all subgroups. There's always additions. There's being additions added, and there might be some moving around. So for instance, this one 2.0 might be 2.6, but the names are going to stay the same. So if I don't do a updated video, at least you'll have that information. I don't really see anything else too much changing. Just to give you a little orientation, everything with a number has something to do with plotting on the screen, whether it be an entry zone, whether it be VWAP, moving averages, whether it be background plots or colors, alerts, audible alerts, etc. That is all got something to do with the numbers. When you get into the alpha right here, this is all dealing with trade management. And actually, these two used to be separate indicators or strategy. This was a strategy, and these were indicators, and the two of them were married together, and that's how we came up with this. So just so if you're dealing with any kind of questions on stop placement or offsets or targets or anything like that, any trailing stops, any business like that, it's all going to be under the trade management section. If you want to find out why something's plotting on the chart, or if you want to change a color on the chart, it's going to be based in the numeric section. Now there is two audible alert sections. There's ones for plotting, and then there's ones for an audible section for the trade management. For instance, the auto trail, the trade cancel, this different sounds and things like that that apply to when trades take is in that section. If it's on the screen, then it's going to apply to this section. Okay, that's it for that. So let's move forward to group number 1. Okay, continuing from version 0, orientation, overview, we're going to go to group 1. So everything that might be checked are defaults, and I might change them as time goes on, but you could obviously change them anytime you'd like. So just because they're defaults doesn't mean that they're golden, and you shouldn't change them and review and check. In any event, the chart that you're looking at in the back is going to be your primary chart. Typically, I've made this for myself, and the way I trade is I like to see other things on other charts, but on higher time frames, because the smaller chart that I'm looking at is basically used for price movement. for indicators such as moving averages and things like that, I don't want to use this chart. It's just too fast. So I want to use higher time frame charts. So in this part, there's a total of, technically behind the scenes, there's a total of 5. And if you notice, 1 is missing. 1 is your primary chart. So you don't need to synchronize with your primary chart. If you want to synchronize to a higher time frame chart, you would then click whichever one or more that you want to synchronize with. Basically, if you don't have any checked, then everything is going to be based on this chart, and it will take trades based on this chart only and not synchronize with any of the higher time frame charts. If you add the next level of higher time frame, then the 2 charts need to be synchronized together, meaning that this chart here, your primary chart, has to match the next higher time frame chart. And if you want to go to the next higher time frame, you could do that. So that means this one has to match the 3rd highest time frame. If both of them are checked, then all 3 charts need to match. All 4 charts have to match, and obviously all 5 charts would have to match, meaning you probably won't get very many trades. But again, it depends on the market because everyone's different. So if you were to do the highest time frame there is and sync it with this primary chart, then that means this primary chart, which could change too, by the way, if your primary chart is matching this higher time frame chart, then the 2 of them will be synced together, and as long as they're long, they're going to trigger when appropriate, and as long as they're short, the background color will determine what color of direction we're going to go, assuming that both of them are matched up. Now, once one chart is long and the other one is short, then you'll get transparent background and it won't apply, meaning it's not eligible. So that's really it as far as the synchronization in group 1. So when I first start making a template and I start at the very beginning, the first thing I do is take everything off, and you could start with 1 or start with nothing and just go with the original chart that you're using. I use an 8-2, a 5-1 in some cases, and in some cases even a 13-2. So if you were to move to a higher time frame, I would just start with that and see where it goes. And if you want to bring in higher time frames, then just start clicking and see what the outcome and the results become. Keep in mind, if they're all checked, then that's 5 charts that all have to be synchronized together, so to be limited. Okay, so that's it for group 1. Moving on to group 2, which is a bigger section. All right, moving on to group 2. Now, group 2 is a bigger section, and they're all divided or subgrouped. So I'm going to cover all in this video. But keep in mind, as I mentioned earlier, that I might move them around. For instance, this very first one, I'm thinking of moving it down to the moving average area, but the name's going to stay the same. So if you're looking at a video and I haven't updated it and it looks like it's group 2.9, well, then obviously it's been moved around, but the EMT orientation is going to stay the same as far as the logic is concerned. So let's start with this very first one, and that is kind of simple. It's just 1 line. If you want the moving averages to be orientated together, meaning the first one has to be in front of the second and then the third one. If you want them like that, then you would have that checked. So let's talk about these moving averages here. Let's just jump to group 3 here, or 3.1, and that is this is just the period moving average. So this is a 55 period moving average for this. That's going to show on your primary chart. If you want it to plot, you can. If you don't, that's fine too. Certainly you could change your colors. The next one is a 165 period moving average for your primary chart. And again, you could turn it off and change your colors. They are shaped a little, even though the colors are the same, they are shaped a little behind the scenes. They are different. Actually, I could probably turn them on right now just so you can see them. So that's why I was saying moving this one down here, just because it makes more sense. If you want the 55 for a long, if you want the 55 period moving average, or whatever you might change that to, let's say you change it to commonly a 20 or maybe even 100. If you change it, if you want the 200 or the 20 in front and require the 20 to be in front of the 100 for a long, then you would want to check that. And obviously the 20 moving average would have to be under the 100 moving average for a short. It would do that. If you turn that off, then they don't do anything other than plot for you. They're not based on anything. I take that back. They will be based on some areas here, but the orientation won't require. So the moving averages will plot or not plot depending on what you want. However, it doesn't require that they be in any orientation. So by default that is on, but you can turn it off. So let me jump to the third one here, since we're talking about moving averages. And the third one is a little more unique. This one you can plot or not, like always. But here, this check here means you want to bring it into the group. If you don't have it checked and you only have it plotting on screen, then it's nothing more than just an EMA for visual purposes, and it doesn't have anything to do with the orientation. If you have this checked and you have the orientation checked, then that means all three have to be synced together. So you might want to say, you might want to have this one maybe a minute chart, and you would then go to the value for the minute is 5. These two here are for Ninja, the bar size, but for a minute chart or something other, it'd be the value. The period, typically 14 if you're going to do a minute chart, and you're going to do a 5-minute chart. So if you want this 20 moving average in front of the 100 and then the 100 in front of the 5-minute, then that is what's required in order for it to take any longs. And of course, obviously the opposite, if it's a short, has to be under the 100, and then the 100 has to be under this one to take a short. And again, if you don't want to see them, you don't need to see them. However, it'll just still do the logic in the background. So taking this out of the mix like that will just plot the 3 moving averages, but this one will not be required in the orientation. So that's it for the moving averages. Let me just close those up. And that's what I was saying as far as moving that down there. So this next group is the spread of the 2 moving averages. And you know what? Let me pause for a minute and let me put them on. Let's see. Do we have that checked? Let's plot it, but I won't here. I'm going to put it back to what I like. Here we go. Let's do a 55. Okay. So let's turn those on. I'll come right back. Okay. So I'm going to go back to here. Let's turn that one off. Let's just give you the orientation here. So this is the first moving average. That's the smaller one. And then this is the second one, and this is the third one. So you could distinguish them by that format. You could see that if we require a orientation beyond, this won't take any trades if we're using that third one, which I think I've unchecked it, which I did. So in this case, this is a 20, 100, and then it's not being used. So this one here is only for visual purposes only, and it's not going to affect anything. So technically we could have even turned it off plotting. So right now we're only dealing with the small, number 1, which is the 20, and number 2, which is 100. And for a short, they have to be orientated in that matter. For a long, they would have to be orientated in this matter, which means it has to be above that one. So I think you got that. So we can move on from there. So let's talk about the spread. I'll turn that off. So the spread. So the spread means it's moving average 1 and 2. 1 and 2 only. The spread is this one here and this one here. So let me just turn this off. I have to go to setup and turn it off. I'll turn it on for now. Let's just turn that one off to get it out of the confusing. And we're only dealing with 1 and 2 here with the spread. Whether it doesn't matter if you have orientation on or not in this case, but we're only talking about the spread. So let me apply that. I'm probably going to have to close this screen in order to do some measurements. Pause it. Okay, yeah, I'm going to have to close the screen because it won't let me do any measurements. Yeah, let's just do it. So what we're talking about, the spread, is the spread between 1 and 2, and that's 8 ticks. And so if we're about ready to take a trade, I'll talk about this panel here in a minute, but let's say you're, oh, by the way, and this one's VWAP. So let's assume you're going to take a trade and you're going to go long. This one is above this one, but your spread right here is 13. I might be off a second for the minute, but in any event, it's 13. It even shows you the current bar where your spread is. I guess I'm on this bar here. So there it is. There. This bar. Make it a little bigger. So the spread is 13, and if you notice in your settings, go back to that spread, it's 5 and 50. So it will take a trade. The reason for this was if it starts getting into this area here, and again, this first one here only deals with the one bar that you're on. So if you want to go back in the history, you have to do a manual measurement. So when it starts getting to here, like under 4, it's not going to take any trades because it's too tight. And there's reason for that. And if they get too tight, they just really don't kind of know. Wrong one. I want to get a 4 here. Where's it's down here. This one here. Sorry about that. So when it starts to get really tight like this, they're too close together and you don't want them. Now, what I do when I first start playing with settings for a new chart or a new instrument, I take all that off. And I take all the exclusions off, all of group 2 off. And I just look at the trades manually to see where they take. And then I'm like, how can I remove these? Because they're getting in chop. Well, this is where the spread came in. This is one of the very first ones that we've added because of the fact that anytime you're in chop, these moving averages are too close together. And on the other side, if these moving averages get so far apart that it just needs to come back and retrace a little bit, you don't want to take trades up there either. Now, you might miss a couple because if you're in a powerful trend move, then it's still going to take them and set up. However, if it's too far away, if the spread of the moving averages are that far away, and that's why I have it set as a default of 50, because you're probably never going to get a 50, so it's more than likely not going to apply. But there are times where I'll bring that down to 20, and so maybe 5 and 20. Now I've left the default at 50 for your max, only because of the fact that you don't see it that often. But by all means, depending on the market, might want to bring that down. So that's the spread of the 2 there. So let me go back here, and that was the spread. So now we're going to talk about the next spreads. Now this is a 2-section spread. So this is the measurement of an entry zone, or should I say a would-be entry zone, and the EMA 1, and this one would be EMA 2. Now I have it set to default to EMA 2. So you can see in this case what we're looking for, there's an entry zone here. So let's use that one as an example. We are taking the center line of the entry zone because that's truly where the numeric is, and the second number 2 EMA, and it's 18 ticks. And if we were on that bar, it would show 18 ticks right there. But because we're not on that bar, it's not going to. And anytime there's a plot of an entry zone, that one right there will show what the spread is. But as I say, we're not on one right now. So this is an 18 tick spread right here. So if you notice, you come back down here to our spread, and we require and I have it defaulted on that for purpose point of 0.01 because I'm fine if it's on top of each other. As a matter of fact, that's not bad. Having an entry zone right on that moving average isn't bad. I don't have a problem with those, and so that's why I just put the minimum number in there of 0.1. And then 20 though is the max, because if that gets too far away, and you can see we're kind of stretched right now anyway, so that's where I was talking about. If it gets too far away, you don't want it. So if that were, and I can't do that. I have to close this in order to move that. So if you didn't want to show this one and didn't want to have the opportunity of taking it, now in this case you wouldn't have taken it anyway, only because of the fact that it never came back down. So unless you had a market order in there, then it would have taken it. But typically I have it on the way down. So again, it depends on how you want to do it. If you want to take a market order there, then you would have been in a loser. But regardless, if you would have had your settings of 15, then that would not show up at all. So that's the theory behind that one. So let's go to the next one. And the same theory for the first EMA if you want to measure this one to the would-be entry zone. Okay, so the next one is VWAP. Now this one requires you to have Ninja's license, lifetime license, because this is an instrument that they only allow for lifetime licenses. So if you do not have a lifetime license, it's going to say lifetime license required all in here. All these are going to, you're not going to be able to do them. You can't check them. But I do have a lifetime license, so I, in this case, can check it, and it is checked. So what this means, let's put this over here. I can't move that with this open. So what this means here, this is VWAP, and you could change the color on it again down here, but I like orange, construction orange, because it's cautionary. And what it does is it takes the Ninja's VWAP number, and you could put these on as two. This is just strictly VWAP settings. You could take that, put that to none if you don't want to show the standard deviations. And I'm only showing 2, the second and third standard deviation, but you could change those just like you would with the Ninjas there. The only thing that we've added to it is added this zone. You see the orange zone. And basically what this is saying, that if it's queued up for a long, or would be taking a long, I don't want to take any trades in the zone. This is like a no trade zone, not like a no fly zone. So if we are 10 ticks, everything's based on ticks. So if we are 10 ticks on a long on top of VWAP, like right here, and 20 ticks underneath, I don't want to take anything for long in there. So basically, if our price, and if this were to be setting up for long somewhere in here, it wouldn't plot, or it would turn off. If it did plot, and then it started to get too close, then it would just turn off instantly. But needless to say is if you get too far for long under VWAP, because how many times have you seen it bounce down? Now granted, sometimes it does bust through, but a lot of times it doesn't do it. It bounces off this. So I don't want to take any long under here. I don't have so much of a problem taking the longs once we get up here, and that's why it's a little shorter, a little less. And you could change that. You can make that 0 and 20, which would bring it, the zone would be looking like this. And as far as the length, you can make the length a little longer. I have it at 100. You don't have to make it that long if you don't want to have it come all the way out there, 100 bars. If you only wanted to see like maybe 5 or 10 bars, you could change that. But I have 100 bars because I want to be able to see that whole cautionary area. So let me go here. So you can see how, I don't know, I just started market replay, so I don't know if I have any that would set up. See the bars, the zone stop, but it's still technically there, regardless if it's plotting or not. Well, anyway, that's really about it until we get into some more data. So that's that one. So let's go then to the next one, which is the high and low of the day. Again, this is the same standard indicator from Ninja. It's the current high-low, and it does not require a lifetime license, so you're okay to pull that in. You don't need to use it because it's included here, assuming you have it on. and you want to plot it. Obviously, it's plotting right there. But if this is on this zone, and it's synchronized for a time too, because at the beginning of the day, you won't get any trades because it's going to be like right in the center of that zone. So I've got a timer on that. But needless to say, again, this will plot for 100 ticks. The opacity is however thickness you want it. And then I have 10 ticks. So let's go find the high. There's the high, the little shark teeth. So there's the low and there's the high. And you can see because we're going long, it's going to be up here. You don't see it down here because we're not going in that direction. So what this is saying is that if we're getting really close here, I don't want to take any, if there is a setup, I'm not saying that there is a setup, but if there were a setup, I don't want to take any longs going into that high of the day. Now there's a lot of setups that do want those breakouts, so you would obviously want to change that or maybe even turn it off or make it 0 or something like that. But the point of it is that it's just one of those things you could eliminate, and that's why it's under group 2, because it's an exclusion. And there's one of those there's the second standard deviation and the third standard deviation for the VWAP. The first one I don't have plotting. You can have a plot, but I just have 2. So that is that one. Back to strategies. Moving right along. Where did we leave off? Okay. Oh, that was the high or the low. So, okay, and then these are just background plots. These are the entry zones themselves. I'm sorry. Yes, the entry zones and the backgrounds themselves. So if you have the background on, you'll see the red and the green, like you see there. When things line up with this primary chart, and if you are synced to a higher one, in this case we are, that means at this case both of the charts match and are synced together. When they're gray, I use the gray background. So when you see it transparent like that, or whatever color, if you use white or black, you'll see white or black there, but whatever it is, it's going to be transparent, and they're not matched. So therefore, when they are matched, you'll get the red and the green. Now, what I call is the early trend Q, which basically just tells me that it's weakening up. It's not as strong. It's still going to be green. It's just showing a mint. And it's still going to be red if it's down, but it's just showing a pink, meaning it's just not as strong. Now you could turn that off, which is no problem at all, and this would just turn all red, and this would turn all green. That's really all it would do. And by having that on, it just indicates that it's just weakening up, and anything can happen, kind of thing. And it could go back, like right here, it was strong, kind of weakened up, and then it went strong again, kind of weakened up. It went transparent, and then it changed to green, strong, and then it weakened up here. So that's a good explanation of the early trend here. Again, if you don't want it, you can turn it off. And everything else down here, we deal with now the entry zone. All this here is we're dealing with the entry zone itself. That one there's one there. Well, the zone that you saw earlier, the red one. If you want it, when it sets up, it's at 0. But if you want to offset it, so for instance, if you start with 0, and when it triggers, it plots the center of the zone, and in this case, it's 2 ticks high. So that means it's going to be 2 ticks higher of the center line and 2 ticks lower than the center line. The center line is truly the number. But again, we go by zone. So if you wanted to make that 0 and just have a little line there, that's fine. But it doesn't give you a lot of room. So that's where we come up with the zones. So if you made that 4 or 6, then that would be 6 ticks above that center line and 6 ticks below that center line, which give you a 12-tick zone, which is a pretty big zone. But again, depends on what you're trading and how you're doing it. But I have it set to 2 ticks, which is basically a 4-tick zone, which is the one that you saw earlier. Go back to see if I can find it right there. That's a 4-tick zone. If you measured it, you can see it's 4 ticks. So now that's at a 0 offset. But let's say you don't want it right there when things line up internally. you'd rather have it back here a little bit. Well, you could do a negative or a positive offset, and that would move that. So when it does line up, it's lined up. However, the zone itself would be plotting here instead of here. Or if you did it on the other way, if you did a positive number, or I forget which way it is, negative and positive. Yeah, positive backwards, I believe. So if you wanted the zone to be here, meaning, okay, it's set up here, but I don't want to just get in right away. I want to, basically have a little confirmation. Then you could put your zone there. And when price gets in there, it'll take it. And we'll talk about the placement of the strategies at a later time. So there's two types of offset. You could offset the zone itself, forward or backward, and then also when you get into the trade management portion of it in Group A, when we get to that video, then you also have the option is when it does get in there and takes a trade, you could actually do an offset there too. So in any event, that's the offset, the zones. So let's go back to the next one, which was Group 3. So that's and then the length of the zone too. Now, by default, we have it at 24. I've been playing and might be changing that default to like around 40 or 50 bars because I'm using a faster chart. If you're using a slower chart, then you probably don't want this entry zone hanging around. If you're using a 5-minute chart and you have a 40 bar entry zone, that's going to be hanging around for way too long. So, but I'm using an 8-2 chart, so every 8 ticks it changes, and therefore I do want it hanging around a little bit. So therefore it's set for 24. Now, if something changes, so for instance, if this moving average gets on the wrong side, it'll just turn it off sooner. So in this case, you probably have I believe it's the full length of 24 bars. However, that's because it's still matched, and as soon as it doesn't match, it's going to make it shorter automatically. And then this one here is the plotted itself. If you don't want to see the entry zone, then you can just turn it off and not plot it, but I don't know why you'd want to do that. The next one here is plotting from the higher time frame. If you want to plot from the higher time frame that you may be synced to, like in this case, we're in Group 2, you would click this one here. Oh, I'm sorry, I'm the wrong one. This one here, plot entry trigger on all charts. If you click that right there and you have other instruments of this type on, it'll plot a little dot on those other charts also. So if this strategy is running on this chart, but you're also doing something on MNQ on another chart, maybe you're looking at a 10-minute, 15-minute chart or something like that, and this one tricks, it will show up on that chart. That's just a little dot. So you see it. And there's the colors of the entry zones, my preference. So you could change those entry zones, and the opacity you could change. And now this one here is the one I was alluding to before. This is the higher time frame. So if you were checked to the higher time frame and you wanted to see that when it's lined up from that higher time, you could click this box and it would show you here. It's in the box is going to be in a dash or a solid box around it, whereas these don't have any borders, though the higher time frames would have a dash or a dot behind it or around it, an outline of it, and it would then I guess I could turn it on, show you that. Let's see, let me pause. Okay, so these are that higher time frame. Now they won't do anything as far as logic is concerned. I'm only having them plot for information only. And you can see here as the price on the smaller comes back, it's looking for a long, but the higher time frame, you notice it converted, and it's got one there. So boom, boom, and then off you go. So the logic isn't built in yet, may in a future date, but that's where it is. So, and there's your pullback. So that's information only for right now, and that's that. And of course you have to be synchronized to that higher time frame. So where are we? Okay, so now so that's that higher time frame. Okay, and then the length of and then you also have the length of this one too. It's defaulted to 40, so it's going to hang out there for a little longer. And the reason for that is because this is a faster moving chart, so it needs to hang out there a little lower because this is a higher moving chart. Okay, so I think that's for that one. And we've already talked about the EMAs, and that's it for this group. So as I say, this is a group that we're adding to, and some things might be changed and moved around a little bit, and I'll probably do another video because this is a longer one. And it'd be nice to show that. I should probably just make pictures for the future so I could have this open and then just drag a picture over to show you what it looks like. But this is my first video for this, so wait for the next revision of that one. All right, so let's move on to group 4. Welcome back. Okay, in this video is going to be covering group 4. Now, group 4 is just alert plots. Behind the scenes things are done, but these are just on the screen, just plots. If you'd like to see them, if you like a clean chart, then you don't need to see them at all. It's not going to change any of the logic. It's just going to kind of give you some idea of when things are happening, as if you're trading manually. So in this case, they're all going to be pretty much the same. You have a reversal bar warning, and then you got the colors of that warning, and then you could have the text that'll plot, which is its default, and then you have the font color of that warning is this goldenrod, and then you have the full reversal. Now behind the scenes, there's 4 moving averages for each chart, and when they get lined up, meaning the smaller ones or the faster ones have to be in front or above the larger ones, then it's considered in a long trend on that chart and on each chart. So if you want to see when that's going to happen, you would just, if you want to see when that warning, for instance, the faster moving average, the set of the faster moving averages have changed, you could show that, and it'll show a reversal warning. Doesn't mean it's reversal, because it could certainly change into a continuation, but needless to say, it's a warning at this point. If it then truly does cross that higher time frame chart or that higher number moving averages, and they cross and they reverse, then it's going to be called a reversal. Now, group 1 is this primary chart. So, but if you remember correctly, we are synced to group 1 from our earlier discussions. And so in group 1, we're synced to group 2. We're synced to group 2. It's group 1. The whole thing is group 1. I guess I could see how that could be confusing. The whole section is group 1, but within group 1 you have group 2, 3, 4, and 5, or maybe you should just call them chart 2. Let's say. So we're synced to 2. So if we wanted to see when that was going to happen before, so we kind of had an idea, we can click these 2 or 1, whichever you want. Well, obviously you don't even need the reversal, because if you have the reversal, you'll see the color change, assuming that you're synced up to it. But this way you'll see it on the chart plot. And so right now I'm going to turn it on, and we'll show reversal warnings in there. As far as, and this is all the same for all the groups. Now when you get to the bottom of this section, we have the reversal arrows. You could change the size of the arrows that we'll be plotting. And then the next section is the spread. Now the spread is up here, if you remember those numbers that showed, and that was from group 2 that we talked about, the spread. That is where you're going to find the plots here. There's the color and the size of the text and where you might want it to place. I place it over here, but if you want to make it go on the left a little bit more, you can make that number bigger. And then this next group here is where we talked about in group 3, the entry zone dots that show up on other charts are right here, the colors. And you can go refer back to that video on group 3 that talks about those. So these are just all plots. So let's just, I'll just turn this on right now. Okay. So that's it. That's all it is. It's just, and you can even see it's weakening up. So we're going down. Here's a full reversal. You've got your background colors that matched, and it's just plotting for you. So now you're going down. Now you got a warning. It's a blue arrow up. So now you get a warning. It's weakening up, and that set of moving averages are moving up. And then here you can see they actually cross through the higher. This isn't behind the scenes now. It's crossed through that higher moving average, and now you've got the full reversal going back up. And that's it for the plots. So the next thing we'll discuss is group 5. All right, group 5. This is going to be Audible alerts. And I have it on, so I'm not going to be able to change anything. And these are just alerts that do nothing more than give you a beep or a ding or whatever you select when something happens. So remember we talked about when there's a warning here, it'll give you a little ding if that were checked. And then when there's a full reversal of that higher time frame, it'll give you a little dong, etc. And you could do those are all off by default. Otherwise, you'd be probably going crazy with all the dings and the dongs. Further on down, you have some other audibles. For instance, this one, when the EMAs cross, the larger EMAs, if that's checked, I have a video, I have an audio file called Bullish Moving Average Cross, and there's one Bearish Moving Average Cross. So when they cross, wherever that might be, right here, when this happens, in this case, you'll get a Bullish Moving Average Crossover Audible file in the background, if that were checked and you had the file. You could change any Audible file you want, but if you want this one, you would have to download it. And again, under free stuff, where did I put that? Hold on. I'm sorry. Yes, it is here. It's been a while since I've been there, but you could. But this is just a whole bunch of download audio files that I have, and they have to go in the right spot. And you can reach out to me via contact if you need more information on where to go on that. But they have to go in a certain the sounds folder. But anyway, if you have that file and you put it in there, or any Audible file that you want to put in there, just click this down arrow and pick something, and you check those. That would work. And this one here too is another one, and this is called Entry Zone Long and Entry Zone Short. That too, also Audible file, is in that downloadable file, or any other wave file that you want to put in there. If those are checked and this plotted, in this case, it would say that this Audible file that I've made has a little ding, 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 Entry Zone Short. And that way, if you're not really looking, if you're typing an email or something, and you hear on the side and you're on your chart, and it says Entry Zone Short, you can kind of look over and see if it's going to take it or not. And that's pretty much it as far as the Audibles. It's kind of an easy group. So I'll close this video on that one. Okay, this might be a little bigger section. We're going to be talking about trade management now. So we are going to be dealing with Group A for starters. And this is going to be a little bigger section. There's two types of trade methods you have: automatic, auto mode, and manual. And the entry zone, when it sets up based on your chart conditions and patterns, it's going to place your zone right there. And there's two ways it can get in. If, like for instance, right here it gets in, and this is meaning that the price is coming from underneath and it gets in. And it's just an internal logic, just so you know. You might see on your chart, this would be a SS2 because it's coming from underneath. So an S meaning short and S meaning setup. And then, of course, there's a long setup 1 and a long setup 2. So in this case, this is a short setup 2 because the price is underneath and it stabs back and gets the entry zone and gets you in at that particular point. If the price were coming up like this and then came down to go short through it, then it would be an SS1, meaning it's coming from the other way. So it doesn't really mean anything, but the point of it is it's regardless of how it gets in. So that's all that means. But needless to say, is when you do have your entry zone, wherever you plot it, we discussed plotting that entry zone in group 3 here as far as offsets and whatnot, but let's just say right here, there it is, and we want to get in. So right here is your entry trigger. Now, what that will do and what that means is it will trail until it gets a trigger. Once the price gets in there, you'll see a little line. Now, in this case, we have it set for 1, or in essence 0. Basically, it's 1 tick. It needs to go 1 tick in your favor. So in this case, it comes back down here. It gets into the zone. You'll see a trigger. And in 1 tick with NASDAQ, you probably won't see it because it happened really quickly. But you'll see a 1 tick, and it has to retrace 1 tick back into your favor, and it'll pop in and pop the order. Now, in this case, the order quantity is 1, and the offset is a -4, meaning it would have to come into your zone. It would create a trigger down here. It would go hit the trigger, and then it would place a limit order 4 ticks right there, waiting. Now, if it keeps going down, you'll miss it, and you won't get it. If it pops back up again and gets you, you'll get it. Now, with NASDAQ, it probably will do that, but the caution with these offsets of 4 or very small, let's say with NASDAQ, maybe under 10, I would say, you have the likelihood chance of the market moving faster than it could be placed, and you'll get a ninja warning saying you can't put a limit order above the limit order that you're trying to go short on. It hits it on the wrong side. So you might get that warning if it's too fast. So usually with NASDAQ, I just have it at 0. So just get me in, don't bother with it. But let's say you had a bigger entry trigger. Let's say you had 10 ticks. So once it gets in there, and you'll see a line, an entry trigger, a line that will get in. It will be 10 ticks under here, which means it now has to come back 10 ticks to put you in. And then that way it's more of a confirmation. Now, confirmation costs, but needless to say, if it gets too far away, it'll cancel out. So that's how that all triggering, and I'll touch on it again when I have some live data so we can actually see things happen here. So we're just going to deal with one contract right now. Now, in the event that, let's say you have this here, this trigger, and it gets into the zone and the trigger is plotting right here, and I want you to come back. If it goes up, let's say we're down here, and let's say the entry zone is right here, or I'm sorry, the entry trigger is right here, and it goes up, this entry trigger will follow and chase it until it gets so far away from this entry zone, and then it'll cancel out. If it gets too far away, it just cancels. But if as long as it's within the zone of the entry zone, as long as it's 6 feet, 6 ticks, you'll get it. Otherwise, it's going to cancel. Now, if price gets too far away from this entry zone, it will invalidate itself at 4 ticks. Now, I have it tight like that on purpose. I had it originally bigger, but then I'm like, no, the entry zone's there for a reason, and I want it tight. And if the price gets there, I want to get in, and I'll give it a little variance of 6 ticks to go in either direction, go in that direction, or 4 ticks to go in the opposite direction. But needless to say, if it gets too far out of that, then just invalidate it or cancel the order altogether, and the order just comes off. Because if you have a limit order waiting there with an offset, now if you have that at 0, it's just going to get you in. It's just 0 offset, and you just get in. But if you have a positive offset, it'll put an order on the a stop order, and if you put a negative, it's going to be a limit order. In this case, it's a limit order, so it's going to put the order waiting for a pullback. Well, if it never pulls back, let's say you have it right here. It goes in the entry zone. It's coming down. It gets into the entry zone, and it puts your order in. Now your order is sitting here with an offset, waiting to be filled. It's sitting here right here. Price comes back, doesn't touch it, and then goes away and comes down. Well, in 6 ticks, this order is going to be canceled, and you don't want it hanging out there. And then let's say you have it the other way, it's going this way, and it gets too far away, it just invalidates it. So that's what those are for the automatic mode. Now for the manual mode, in this mode, this really doesn't apply because it's just a bar. It'll chase it until you turn it off if it gets too far away, and we'll show that right now. And manual is just that. It is what it is. So let's turn this off right now, and let's throw some data in here. I think it's time we start playing a little bit here. So let's start with this manual mode. Let's just do, let's just go. So it always defaults to pause mode. Regardless if you click manual and go to auto, it's always going to be in pause because that's kind of dangerous. It's a 2-click system because there's been times I put it in auto mode and boom, you're right in his entry zone. You just turned it on right at that part and you're in. And I kind of want that. I want to be able to, turn it off. So let's go back in manual mode though. And now now we're active. So now nothing's going to happen and we're just waiting for our conditions to match. So let me just get some time because this is midnight. So let's just get out of here. Let's get some action. So let's say I want to go short. So what I would do is I would just go short. So let me stop this here for a minute. In order to go short, the way this works is you have to have, in order to go short or go down on a down bar, you have to be in an up bar. So if you're going up like this and you say get in an up bar, well, you can't because you need a down bar. Now, once you have a down bar, now you can get up and then boom, it would put it right there. And the same thing if I wanted to go short. If the conditions change, let's say it's I just want to get a small short to get to the long. Maybe we just want to take a small little step to get to one of these or VWAP or something like that. So I can go short, and so now right there, boom, I'd be in. If I click the button now, I have to wait for the up bar. So now I click it and it says short, and now there's my long, and boom, I'd be in on this bar here. So in this case, I'm in a down bar already. So if I click it right here, nothing's going to happen until I get an up bar. So let me slow it down just a little bit and play this just right. There we go. Okay, so now you see, now it's active because I clicked it on the down bar, but now it's got the up bar. So now that it's got the up bar, now it's chasing it and it's going to get the down bar. So this will chase up, and as soon as I get a down bar, it's going to put me in. And the same thing goes with the other direction. So let's say we're trying to get this top here, and now I haven't evaluated this, so don't take this for disclaimer here. But so it's going up here, and I want to go short. So I'm getting a pie, and so I'm going to let it go. Now, if it gets too far up and I don't want it anymore, I don't like it because now it's just in the upper. Now see it's changed. I can just turn it off. Okay, but in this case, it's going to go down at some point, so I'm just going to let it go and trip myself in, and there's my order. So stop it. Now remember, there's my 4-tick offset. So there's my order sitting there. So here's my, and again, everything gets counted. Everything with the trade management is managed by the entry trigger. So if you want to measure a target, it's from the trigger, not from your entry, because the setup is here. This is the entry trigger where you got in or where it tripped. Just because you have an offset and want to get in a little deeper is your business. But the point of it is, measurement wise, it goes from the trigger. So anytime you want to do any measuring, you have to do it from the trigger to wherever you're going to go. So in this case, we have that 4-tick offset, if you remember. And so there it sits. So if it gets too far away, it's going to cancel itself out. Or it's going to get it. Let's get this a little faster.
Order submitted.
I got it. Okay. So now we're in. Now we're short. And, oh, you know what? I don't have a target. I didn't put a target on there. So I took a picture of our settings here. So here was our offset. And if you notice, I didn't have a target. So we didn't talk about B yet. So, but that's fine. So that's it for the manual mode. Let's just go. I'll just do it a couple times supersonic fast here. So I'm waiting for it to come down, but I need to get an up bar. I need to retrace. So let's go a little faster. Eventually it's going to go down. Now I don't really kind of want it right now because it's kind of getting a little too far down, but.
Bearish moving average cross.
Okay, well, we certainly don't want it. Now if I turn a up bar, it's going to plot right away because I have the down bar already. So let's go the other way. Oh my gosh.
Order submitted.
Okay, so there's our offset, and of course it moved away from us. That's why with NASDAQ I just want to get in.
Order submitted.
Okay, let's hope for the bounce. It might pop us out. You notice I have a small stop for that reason. Whether it makes it or it doesn't. Okay, my auto trail management is now in effect, and we haven't talked about Group B yet, but that's all stop management business. So I'll just let this, or you can hit exit right there and get out. So now if you hit, this is a word of caution here, let me stop this. If you hit exit here, and that's why that's there, so it'll just get you flat on the position and be ready to go. However, if you were to go into here and right click it and say, close position or flatten, it'll turn off the strategy. And then you'd have to reactivate it again and turn it back on, and it would go from there. So the word of caution is to use this one. That way it doesn't interrupt the strategy, because then if you're using your target, goal, profit money, or your stops, it won't reset the values. So we'll talk about that again. We're getting that's in group I think D or E or something like that. Okay, so I think that's kind of it for that section. Now if we switch to, let me check one thing. Hold on. Okay, I want to just check something real quick. Took another order. All right, so if we switch to the auto mode, then, and then we unpaused it, then it will do everything based on our settings automatically. Now, I'll just let it go. Now again, these are just default settings. We haven't played with anything, so it's gonna do what we have with no target, which we may not want. And it might take a while until we see an entry zone, until things line up based on our conditions. So it might not be for, there's one right there. Oh, you just heard that. You heard that, well, maybe you didn't hear that, but I will, let me turn on the speaker here. Maybe you can hear it again on the next one. But there was a little Audible file that had a little jingle and it said entry zone long. So that's when you maybe pay attention if you're writing an email, as we talked about earlier. So let me see. Now this is going to hang out for, we have it set for 24 bars. So you can see here, if I take a measurement, it's going to be 24 bars right here until it ends out. And if things changed before that, it would make it. So that's why you'll see some bars are smaller and some bars are zones. Some zones are longer than others. So you're going to hear the tone in a minute.
Order submitted.
Okay, well, I was probably going too fast because that order filled. Anyway, it's not that important, but there's an audio there. So, okay. So there's our trade management. Which it always would happen like that. Okay. So that's the auto. That's the auto. So since we're talking about auto here real quick, let me turn this one. I'll just pause that for now. I have another chart here. So we'll go back to manual mode. So here's another chart. I'll just make it bigger. And now this one, I have the strategy on, and I've done a few little minor changes. So if you notice, we haven't talked about it yet, but in Group D, you've got some options as far as where you want this positioned. And I've set it, because of the chart is a lot smaller, I want it further over on the left max out because I have this only, like a 6-inch chart. So we're going to use, I think I'm using the same settings. These are just defaults. But in this case, I'm not using, I'm not using any of my backgrounds. So in group 3, I've turned all my plots off. If you notice, I'm not going to see entry zones. I'm not going to see, background colors or anything because I'm using this chart, which is other indicators. This is deviation stuff, and you can put some Bollinger Bands on there and some moving averages, and whatever. But the point of it is that this is a 10 range chart, and I want to do it manually. I have all my trade management in B. I'll go back to that picture that I had. Here's all our trade management in B as far as how we want to handle all our stops and all our stop management, all that business. So that's already pre-planned. All I'm doing now is saying I'm waiting for an area. There's one thing I need to show in here, though. I might have to skip to another group. So let's go. This is based on manual mode because, as I say, I have all the other stuff is not designed for that. I just have it set for this chart. So now I'm going to go, and again, I want to go, let's just go on an up bar. So there's my up bar, and there it is. However, this is based on a 10 range, and I might not want to wait for an up bar on a 10 tick range bar. So in this case, we can go in here. Now I have to disable it. I'll enable it now. We have to go into synthetic data. If we went into group C, I'm jumping ahead here. Maybe I'll combine these together here. But if we go to here and we say, use this is for manual mode only, use a synthetic time frame. And I'm going to use the 5-1 chart. Maybe I'll use the 8-2 chart since it was the same that we were using the other over there. And I'm going to use this chart. Now, when I say on an up bar, it's not going to be an up bar on this chart. It's going to be an up bar based on that 8-2 chart. If I actually put them side by side, you could actually see the up bar. Maybe I will do that. Maybe I'll do that for simplicity. We'll just look at this last bar here. Okay, so even though you're looking at a 10 range, it's going to be basing it on a smaller time frame. And you put different time frames in there. So let's go back here. And let's just slow it down here. So now let's say I want to go on an up bar. Well, this is going way too fast. Slow down. So, all right, so there's my up bar. Oh, boy. Or maybe I can go bigger. Let's go bigger. Let's make it a 30 range. Now, we're going to make this chart a 30 range, but remember I said in the earlier version or earlier on, I don't like to, I'm looking at things on my chart, but I like to, trade on other aspects. So right now, I'm trading based on this bar size when it goes long or short, but I'm looking at it here. And so now I'm going to unpause it. So even though this is not going to move I don't want to wait 30 to get a down bar. So I'm going to say down now, and you'll see now I'm waiting for an up bar. It's based on this here. There's my up bar, and there's my entry trigger, and it's going to chase it. And then eventually it's going to come down. I'm just going to keep it on until it does. And there it is. And you pause it here. Pause. Okay. So in this case, I did have a target on there too, by the way. And so there's your trigger. So again, everything, as I mentioned earlier, is measured from the entry trigger. So if you were to measure from the trigger to your stop, it's 10 ticks. Well, it's moved down already. I heard it cha-ching. So it's 10 ticks. But everything, like for instance, the target. The target is 40 ticks from the entry trigger. And we got in here slippage or offsets or whatever the case may be, we got in. That's where we got in. But it's measured for measuring purposes. And the reason for that is uniformity. You want to be able to measure from your setup, regardless of how you get in. If you get in a little better, great. If there's a little slippage, fine. But the point of it is all your measurements are done from the entry trigger. So that's how That's how you could use the manual mode using different charts. Now, if you want the backgrounds to plot,
Order filled.
then obviously you could do that. But I don't know why you would want them to plot on here if you've got other things that you use in the background. So, but again, so you would take off those plots for the manual mode anyway. If you're going to use the auto mode, then you need to kind of change your numerical group settings to decide where you want to get in. But for the manual mode, if you're just using this for, and I do have somebody that's using this from, I didn't make it out, for manual mode with this type of chart, then that's what you would have to do. So then we have to go into the next group, which is group B, and that's all the trade management. And that kind of gets lengthy too. So let me close this video out and I'll come back. Okay, group B is trade management. So that kind of goes hand in hand with group A, obviously. You could set your just recap here, quantity. Now we only talked about one, but if you had two, you would do two and do 3 entries, and you could do any combinations you want, but 1, 2, and 3 gives you different options of offset. So for instance, you could put offset 1 in there with an offset of nothing, just get in right away, but maybe your next one you want to pull back of 4, and the third one you want to pull back of 10. So you'll get in 1 right away. If it pulls back, you'll get 2. If it pulls back a little more, you'll get 3. Or you can go the other way. You can make it positive. So you can go in right away with a market order, and you can make it a positive 4, which means so if it goes in your direction, it'll add on. And then you can make a positive, 20. And if it goes 20 ticks into your direction, it'll pick up a third contract. Maybe the first one will come off or something. That, however you want to do it, it's here nor there. You could do positive or negative numbers. So that's the offsets. But when you do set the quantities, don't forget to set the target or the stops and the management part of it. So for instance, with entry 1, it kind of goes hand in hand with you got to have a stop. Well, I guess you don't have to, but I want to stop. So if you have 0, you don't have a target, and I think you saw it in an earlier section. I didn't have the target on there at 0, but if you put a target in there, then it has the stop to go with it, and then a target and a stop and a target and a stop for all 3 sections. So that's kind of there's 4 sets of trade management as far as stop placements, and that's basic. And the first one is just your initial stop. And it's quite simple. You got your target, your quantity, your target, and your stop kind of go hand in hand. So that's kind of simple. So the next group you're familiar with too. This is just move to break even or not. I have it, the default is set for on, and when it gets 30 ticks into your money, into your trade, then it'll pull back a negative 10 ticks, so which gives you a 40 tick spread. Again, I trade a lot of NASDAQ or micro, so it's a little bigger than maybe you would if you were doing crude. So, but that's the rationale behind it. So again, these are defaults I'm just using, so whatever you do is your business as far as trade management. If you don't want it, you just uncheck it and won't do anything. But if you do want it, maybe as a safety net when you get so far, you'd want it. Now keep in mind, when I say negative 10 break even, that doesn't mean from your position spot. It means from the trigger, the entry trigger, which I don't have one on here right now, but from the entry trigger, that's where it's going to, it's very important to remember that. That's where it's going to count. It's going to take the trigger and it's going to count negative 10 from that. Now, if you have an offset of 10 and an offset of, let's say, a negative 10, you got a pullback or whatever. And so the entry trigger went on at 30 ticks, but you got in at 20 ticks, and now you're 20 ticks or 30 ticks into the money, into your trade, and it goes negative 10. Well, you got in at an offset of 20. So in essence, you're a lot better. You're a lot better off. If you got in at a market order at 0 and didn't really have a pullback, again, it might be a tick or 2 of slippage, or just for the trade confirmation, it might be 2 ticks or something like that. But again, just remember to measure everything from the trigger, not from your. I know a lot of people are used to just measuring from their entry. You don't want to do that. You want to look for the trigger. And again, there's reasons for that, for uniformity. Okay, the auto trail is very similar. If you're used to the ATM from Ninja, very similar. Same with the break even, kind of similar, and same with the initial stop. It's kind of simple, you know, it's the same kind of concept. Here, obviously, auto trigger is not going to kick in until 45 ticks into the money, and then it's going to trail at 44, and then when it gets 100 ticks into the money, it's going to trail a little tighter at 28. When it gets 120, so on and so on. And then the frequency, the reason why this was put in here was because with NASDAQ, it's so fast and whippy. This auto trail was moving on every tick. And when it moves on every tick, that means it has to go out through your computer, out through the internet, to the broker, back through the internet, back to your computer to process every tick. And with NASDAQ, it gets nuts. And there could be some problems with that. So with NASDAQ, I have that switch to like 4, so it just moves every 4. With other markets, I've never seen a problem with. 1 is fine. So I changed that with my my NASDAQ charts to 4. And again, you could set these triggers anywhere you want. And so you can see what's going to happen here is my initial stop. So I don't have a target. Initial stop is 18. When it gets 30 ticks in the money, my 18 stop is going to be moved to a 10. So it's going to move up 8 ticks. And then still maintaining my spread that I'm kind of looking for. So it's going to tighten it up a little bit. I'm still going to take a loser as far as Ninja is concerned. If it came back and popped me out, it'd be a losing trade. But it's just not the losing trade that I would consider a losing trade, which we'll talk about in group, I think it's group E too, or group G, something, I don't know, one of the groups. Anyway, so then it went to 45 ticks, it's going to trail 44 at 100 and so on and so on and so on. Okay, so that's the next trade stop management. And if they're all on like this, these are all on, that means they're all independent of each other. So, if this one were auto trailing at 10 and it was trailing, and then this one kicked in at 30, it would jump to negative 10 if this were bigger. It won't jump back. It won't go back in the past. So in other words, if you're up 30 and let's say you have your stop loss of 10, so you're at 45. Now how do I explain this? Anyway, it just won't get smaller. It'll bring it up tighter, but it won't move it back. It will not move it back on you. So whichever number is the tightest, that's where it's going to take. Okay, I'm trying. Oh, this is a picture. I can't. Let's see. Okay. So on these next two groups, move that out of the way. These next, just let me do it this way. These next two groups are a little bit more confusing, and there is a video. Go to here, strategies, Trumper Trader, right here. Pivot, trailing, stop, explain. It does get a little bit more in depth, so that's why you kind of want to maybe watch that video in addition to this. But I'll explain how it works. So let's start with the first one. If that's on, and let's say you have a positive number in here, a 1 or above, that means that nothing's going to happen until you get in the money 1 or above. Let me put this back here. So let's say you get in right here, and now you're going long, and you're in the money. So that means this will now take an effect. Kind of simple. If it's 0, it looks in the past for pivots. Okay. So a pivot, when I'm determining a pivot, again, for NASDAQ and for what I trade and how I trade and the size of charts that I trade, I'm looking for a pivot of 60 ticks. That means that I need a 60 tick pivot, and I don't know if I'm going to find one here. That's a 48 tick pivot. So now let me try to find a bigger one here. There, oh beautiful. There we go. Okay, so it's probably not. Here, this should be 60 ticks. Yes, it is 73. Okay. So in this case, it's looking back. So again, I will use this scenario then here. So we're going to go long here, and it's going to look in the past for a 60 tick or greater pivot, and it's going to make my stop once. So now that qualifies as a trigger. So there's my trigger right there, 60 ticks. There's the trigger. Now it's waiting for a resumption of the trend at 44. So now we need a 44. Now we need to get to 44 before it's classified as a resumption. And if it does, then there is your pivot right there. Okay. So what it's going to happen when you're at a 0, you're telling it at a 0, go in the past and look for this pivot. So I get in right here. Let's say my stop is down here. There's my initial stop. And that's where I have it set at. Now it gets in right here. It goes back in the past, looks for the pivot of 60 plus, which it found, finds a resumption of right here before it classifies. So what will happen is your initial stop's going to stay here, and as soon as you get to here, it's going to say, there's my pivot, and I'm going to move the stop 2 ticks in this case, or do I have it 4? 2 ticks under that pivot. So it's going to be right here. So there's your new stop. It jumps from here to here. Simple as that. And then it will follow that and continue looking for the 60 tick pullback with the 44 tick resumption all throughout the trade. But with the 0 being there, it looks at it from pre-trade. And if I had a 1 in there, it would only go post-trade. So that's why I have the 2 for that very reason. Because the first one, I want a bigger pivot because I'm looking in the past and I want to, give it a little room to kind of marinate and move forward in my direction. But that's a kind of a big pivot to maintain throughout the life of your trade. So there is where the second one comes in. If this is checked, this one will then take over at 30 ticks in the money. So at 30 ticks, and in this case, the 30 ticks is from the entry trigger to here. So when it gets to here, this now takes over. So now my stop is here, and I don't know if I'm trailing or not. 44 ticks, whatever. So I'm trailing or not based on this one is here nor there. But I'm right here, let's say, and I get to this 30 tick trigger. So now this is in effect. Now from this point forward, all I'm looking for is a 28 tick or more, which certainly would be here, assuming I'm not stopped out already. So, and this, let's see, this is 28. Oh yeah, perfect. So here it is. That's obviously more than 28. And do I have I keep clicking on that. Do I have a 20 tick resumption? And in this case, I do not. So therefore, it's not going. Oh, wow, maybe I do. If I measured that. If I measured that really, I might actually have a 20 tick resumption. So I've got my 20 tick resumption. I've got my 28 tick trigger. 28 tick trigger. I've got a 20 tick resumption. And now it's going to move this stop that was wherever it is, if it's trailing. Certainly it was down here. And it's going to find its next pivot. And now my stop is right there, which I would have been stopped out right here. That's how that works in conjunction with each other. If you only have one check, then you only get, you don't even, if you only have one, if you have smaller pivots or something like that, and you don't want it to go in the past, and you want to look at from only post trade, then you can put 1 or higher, and as soon as it reaches that level, it'll start and go from there, and just uncheck this one. Or maybe you want this one at the end of your trade. Maybe you want this to start at 100 ticks. So when you're nearing the end of your trade, or maybe 150 ticks or something into your trade, this one will look for small pivots. But I would imagine you'd probably be tighter here too. Like this here, you'd probably be a little tighter. You can see how I kind of tighten up. But regardless, you could do that. That's how the pivots work. But I would recommend watching that video that I mentioned right here, Pivot Trailing Stop Explained. It basically just says what I just told you. Okay, so that's the pivot stops. And I'll leave it there for this video. Okay, welcome back to this next section, which is Group C about the synthetic data series. I breached upon this on the series when we were doing the manual trading because it refers only to manual trading. But as I mentioned there, if you are trading a chart that's a bigger chart and you want to take the trade, but you don't want to wait for the bar of a bigger chart, you can have it go to a synthetic data by clicking this button here and just selecting the chart. Now this is a faster chart. I've even put in a 1-2. Basically, it's just a very fast chart that'll just pretty much get you in any time. So let me go to that chart there, since I think it was this one we were talking about that I did it. And so we're trading this chart. We're trading manually, and this is a 30 range chart, and we want to take an order to go long or to go short, but we don't want to wait for the bar to close on the 30 range. So we would want to go and change that then to an 8. I have it checked in this case on an 8 range. So when this one, it's basing its numbers off this one. So I'll just go ahead and start it. And so I'm going to say buy on an up bar, which I just did. Okay, well, I probably don't have my settings in here correctly, but it was no, let's do that. Let's get that to there. Again, we're looking at this chart, but we're actually basing it on this. So if I'm going to go long, I have to have a down bar. So I'm going to go long here, and there's my down bar. So I should have my trigger, and there it is. It's going to chase me down, and there's my up bar, and then I'm in. So that only takes an effect with the manual mode. And if we would, if we had a larger size bar, we certainly wouldn't want to wait that long. So that's why we would want to use a faster size trigger to trigger when you say up bar. And you can put any size you want in there. Maybe you do want a bigger chart, maybe not a 30, but maybe you can make that a 10 bar. So when it moves 10 ticks, it'll do it. Or the other option you could do is you could use this as the trip, the synthetic data, so it trips faster. But then in your group A trade management, you could say, give me an offset or positive or negative to get in at a certain spot. So I'll trip the button when I want to see where I want to get in, and then you place the order with an offset, and you go from there. So those are some of the options you have, and you have to play with it and actually do it in market replay like I just did, and kind of see how it plays out. Okay, let's move to the next section. Okay, moving right along to Group D. Okay, in this section, got a couple additional options, and they refer to trading. That's why they're in an alpha group. And that is, first and foremost, the buttons themselves. These buttons, right now, you notice I have an offset of 150. In that other chart, I had an offset of 0 because I wanted it further because that chart is smaller. If you're using a full screen and maybe you want the bars over here, then you'd probably need like a number of 300 there, and the bar placement would be there. So that's all that does. These two next ones are self-explanatory. If you want to stop trading after you've met X dollars, you would just put that right there, and then it would just stop trading once you hit that that auto pause goal, if you will. If you really don't need that if you're going to be using the discipline manager, because the discipline manager kind of takes over on all that, and you could read more or watch some videos on that one here under tools, discipline manager. So you can check that one out. It's separate from this altogether, but in this case, if you just put $500 in there, it'll just stop trading at $500. And then with the drawdown, now important though, you do have to have the negative. So if you only want to give up $500, you would put a negative $500 in there, and if you gave up more than that, it would stop trading. And again, it's based on realized trade, so it has to wait until the order closes, and therefore it might not be exactly a 500. It's not based on unrealized. If you want that, then you need to go to Discipline Manager, and there is a section in there for unrealized. But keep in mind that if you have that on and you turn off the strategy, not pause it, but actually turn it off down here, and then re-enable it again, it clears it out and starts all over again. Or if there's a glitch, a ninja, something happens and it smashes the strategy off, and then you turn it back on again. You go to lunch, you come back, you turn it on, then it'll start it all over again. So I would recommend using the pause button so it doesn't clear it out. And the same thing with the exit, as I mentioned earlier. If you go to your positions and close a position, it's going to close the strategy, and when you turn the strategy back on, then it's going to start that all over again, these numbers. So I would recommend using an exit position or a pause to do that. This one here, I don't use as much as I thought I would, but this auto pause business. So what this is supposed to represent, or what it does represent, it does work. As I say, I haven't been using it as much, but Ninja will consider a loss of 1 penny. So if you're looking at your statistics and you want to see your win-loss ratio on your setups, and you're doing it and you lost by a penny, it's going to count that as a loss. Well, to me, if you're looking and you're looking for these runners and you're trying to get up, and it's moving and it's moving, it's going up, and you're 30 ticks into it or 50 ticks into it, and your stop is at break even, because you got to give, especially with NASDAQ, you got to give it room. So you have let's say a 40 tick in the money at 40 ticks, and your stop is at break even, or like in my case that we talked earlier, I have like a -10. So it's a break even goes to a -10. So now it comes back and it pops you out at the -10. Well, Ninja will count that as a loss, but is it really? So what this is this allows you to determine what you feel is a loss. If you turn this on and you click that and you say, I determine a loss of anything greater than 14. So if I go to break even and I get out at a -1 or 2, then I'm not going to consider that a loss. Ninja statistics will, but this won't. So because I need to have a loss of 14 or greater to consider it a true loss, or whatever number you put in there, of course. And so what this will do is, if it sees a loss of greater than 14 3 consecutive times, it'll just stop trading in the auto mode. It just won't trade anymore. Now you can change that to 2 or 5 or 10, whatever you want. The point of it is, if they're consecutive losses of this or greater, then it'll stop trading. That's it. This one here is the continuation. Again, this is the manual mode, and this is for the longs. Now, originally when this was programmed, we said, let me take that back. Let me go to the manual mode. So you're in the manual mode, and you say enter on an up bar. Well, if you have that checked, we're down here. So if you have that checked, then it's going to stay on that until you uncheck it. And it's not on there by default, because it can get a little dangerous. If you click enter on an up bar it'll chase it up, it'll get you in, and it'll be queued up to do it again and again and again until you say pause or stop. And so it's nice, I guess, if you're there and you're able to, click the button and you're watching it, but you don't really kind of want to do that. Could you imagine if you said, enter on an up bar, and then you get a phone call and it enters and everything's fine, and now you're involved in a phone call, and then it comes down and pops you out, and then it gets you right back in on the next up bar, and then it comes and pops you out and it'll get you back in on the next up bar, and so on until you look up and say, oh no, my God, we're in a downtrend. So I don't like that. It's defaulted off, because that way once you hit up bar and you get the up bar and the trigger plots, then it's off. It turns itself off. Now, if you have an offset set and you never got in, it's still going to go off, because just because you have an offset and it didn't set up, the enter trigger triggered, and therefore it reset itself. And now if you want to go in again, then you're going to have to click it again. And that's the way I have it. And, other than testing purposes, if I'm doing some testing and I want to test only one direction, I could do that and click it in that way, and then just have and test for testing purposes. But that's it. Okay, start times, kind of still self-explanatory. It is military time, so you'll see at this time it starts at midnight. It'll go off at 3:48, which is the 15th hour of the day, so 3:48 p.m. For anybody not interested, and for anybody not knowing what military or how to use military time, I'm sure YouTube's got a lot on there, but just consider 1 p.m. the 13th hour of the day. That's a simple way to think of it. Obviously, 2 p.m. in the afternoon would be the 14th hour of the day, and so on. So if you do this well enough, I've been in the fire service for 40 years, so I'm kind of just used to it. Anybody in the military will know it too. Anyway, so, and there's reasons why I have that set like that. And then the next one, for the evening, I have it go on at 6:05 p.m. I just stay away from that 5-minute thing. My computer is set for New York time. I'm not in New York, but it's set for New York time, and therefore everything is based on New York time. So it's going to be based on your computer clock. So keep that in mind. So this is New York time. So and then it's going to stop at 23, which is 11:59 and 59 seconds. And then it'll turn back on again at midnight. So just that 1 second, and then on off, and it goes right back on again. And so I was thinking about maybe adding a third level, but at this point, and we're fine, for news and things like that. But at this point, I'm fine with it. You can give me your feedback, some thoughts on that. That's it for this group. So we'll go to the next section. Okay, this one should be quick. This section, we're dealing with the Audibles. Now again, as I mentioned earlier, you have an Audible here for the Numeric group section, which is all plots and things. And that's going to be dealing with when things plot and triggers and entry zones and whatnot. This group here, Audible, deals with trade Audible. I should stick the word trade in there. In any event, if you have this on, then it's going to take over, because what Ninja does is Ninja considers with strategies, they just have the one strategy file, order canceled. And if you have that, it's just going to say order in or order off, and then order canceled. So if it hits a target, it's order canceled. If you hit a stop, order canceled. Well, I didn't like that, so I wanted to have my own. So I used the same files that they do, but I have it based in the strategy. So it's kind of like a sub menu of the order canceled area. So it's target filled, stop filled, and auto trail, the same thing. Now the frequency, I don't want it to go cha-ching, cha-ching, cha-ching every one tick, because it gets kind of obnoxious. I mean, I love it, and I get the adrenaline rush from the hearing the cha-ching, but on the auto trail. But with NASDAQ and whatnot, I have it set for, on mine, I have it set for like 8 or 10, I forget. And that way it'll only cha-ching every 8, but I still like it and I want to hear it. And then when I do get the order canceled, then it's going to actually say order canceled. However, caveat to this section is you have to go into tools and options and trading. Oh no, it is under general, I believe. Down here, you have to delete it here because this one will take over. If order canceled is in there, and just you click your audios, but if order canceled is in there, then it's going to take precedence. So by removing that and just hitting the X, like I've done, you remove the order canceled file, and then that allows the strategy here to then take over in that section. Now, order canceled will then come here to look. Now, of course, if the strategy is not on, you won't hear anything. So if you have other strategies that rely on order canceled, or you want to hear the audible of order canceled for other reasons, or if you're trading manually and you want to take an order off and you take it off manually on your other charts, you're not going to hear anything like order canceled because you've removed it from all the others and just allowed this to take over. So even though you have these by default are going to be on, you're not going to hear them if you have order canceled. What you will hear is order canceled on a target, order canceled on a stop, order canceled on a, I'm not sure if you'll hear the auto trail or not. You might not even hear the auto trail. And then you will hear order canceled, I guess, because that's what it will do normally. So that's the only thing you're going to hear is if you have that in your options there. So that's it for this one. Let's go to the next section. Okay, this leads us to Group F, the final section. So this group here is statistical data only, and by default, it's turned off because it creates big files, and your computer, especially if you're on a laptop, might not be able to handle it. So it's only for statistical data when you're doing some testing, maybe some market replay, or if you want to record, think of it as a recorder. You want to record your trades in a file. It's going to come out in a CSV file for Excel, and I can kind of get into a little bit of that too. But in any event, what it here is has a statistical data in the file. It's going to pull out an output file. And it's going to say that there's EMA A and EMA B. It's not the same as 1 and 2. I mean, it could be size-wise, which in my case it is, and I would think most, it doesn't have to be. So whatever, you pick your sizes, and it's A and B. Doesn't do anything in this section, doesn't do anything as far as, logically as far as trading. All it's doing is measuring what you've done. So now you can create your grade, and I like a report card. I consider, A grades. In this case, the default. Now I've changed it, and I haven't changed the default, but I've changed mine a little bit better for NASDAQ because I'm looking for bigger numbers. But whatever your numbers are, here's the default you can go by. Anything over 20 is going to be an A. Anything over 10 is going to be a B. Anything under negative C. Anything under negative 10 will be a C. Anything under a negative, and you can barely see a little negative sign there, but anything under a negative or equal to a negative 20 will be a D, and anything lower than that is going to get you your F. I don't have an E. Again, it's like a report card, so it's A, B, C, D, F. We don't have to have F down there because it's just anything greater than that. It's going to be the F. So in this case, you can kind of, now these are kind of small, and as I say, I've changed them. I think my output file might show that, and I'll show you the output file. But in any event, you could change these any way you want, A, B, C, D, and then anything greater is going to be the F. If you turn that on, it will then create a folder, a file, and depending on how long you run it for, it could even create a second file because it'll automatically create a second file. So if you leave this on all the time and never change your settings, your computer will get, your C drive will get so full in no time at all. Just, a couple days, you're looking at a 100 meg file just for one day. So you can see at the course of the end of the week, you're talking 500 megs. You've maxed out your computer and you'll be wondering what's going on. Well, that's it. These are not designed for doing on a regular basis. And I'll kind of get into where I'm going with that. But anyway, so here is what I call my skew. And that's how you can kind of, you could label it, if you will. My skew consists of a 3-digit number, and I stay away from 101 because of SIM. So I start my series with 200. So for instance, if you were to save all these settings, your skew, or you can put in the label too, but the skew for tracking purposes would be 200. Let's start with 200. And then it would be a dot. And then it would be the instrument. So MNQ dot. And then I use the email address because it's unique. Your email address is unique. So everything in that skew is a unique characteristic. And if you start looking into my stats and statuses, that's how I use it, and that's how I could separate. And I can you can watch some videos on that. I'll tell you where to go. Hold on. Okay. So if you go to Tools and then down to NinjaTrader, and if you look at sample data and templates, zip files, this here is where you'll see the output files. And I'll get into those in a minute, but you could download them if you want to see them. And I've got one downloaded, so I don't need to download another one. But if you want to see what they're going to look like, or you can just make your own, obviously. You just, if you're going to go and market replay, just click the button on, and it'll record it. And where it's going to be, hold on. Okay, so you would go to your documents, NinjaTrader 8, and it's right in this main folder of NinjaTrader 8, NinjaTrader. And then there's my files. And you can see the size of these things, you know, they get kind of big. So you do not want to accidentally leave that on because you could run into some big problems. Let me go back and I'll finish this up here. Let's finish this up. So there's the skew, and then as far as the file number, this is the max rows that the CSV file will allow in Excel. So basically what it's going to do is just going to create a continuation file. So there'll be 1 and then 2 and move on. It's going to give you a separate skew on that. So that's all that does, and I guess that's the end of it. So I guess we can go to that file. And you can see it has, to make it unique, it generates a number. Unique doesn't mean anything to me. It's just a unique number that, so it doesn't have a duplicate file. So let's just go into one of these. There it is. So let's just blow it up. And so there's our headers. And this basically is what I call the DNA of your trades. And this is how you can kind of measure what things are happening. This is all the EMAs and all the things that are happening in the background. And these are for future. And then this one here at the very end is your grade. So if you turned on your filter and you wanted to look at, if you're familiar, you gotta be familiar with this. So if you only wanted to see your A grades, you could say, okay, there's right there, P&L, MFE, all that business. If you want to see your F trades, then there it is. There's a lot of them there. Okay, so this is the DNA of what goes on when these trades were taken, and you'd really kind of have to get into this the stat business here because it really gets more in depth. And if you go into back to NinjaTrader, if you go into algo stats, there's things that I do with my spreadsheet. You can watch these videos separately. And that's kind of where I'm going right now with the analytics. So when you go to the analytics, like what'll happen is you'll be able, in the future, it's not available yet, but what's going to happen is you're going to be able to take these files and you're going to be able to, you know, create them. So you would just create an output file, do some market replay or trade for the day, do your trading and record it. And then when you're done with it, you can go and take this file and you would then upload it into the website. And then from there, you would be able to kind of see the DNA of, you know, the good trades. And I like to filter out the A's and say, okay, what was the DNA of the A's? And then what was the DNAs of the F trades? And don't take those. And that's kind of where I'm going with this, because that will help you dictate, you know, what's working and what's not. And in addition to that, more importantly, is the DNA is going to show the change of conditions. So for instance, yes, all the moons aligned and everything was perfect when I got in. However, you know, it's been 2 minutes and things are changing. So what happens? And the logic behind the scene is, okay, things have changed. It no longer looks good. So we're going to do something, whether that be, you know, move to break even or just get out, tighten up, do whatever it might be, is here nor there. And that's all logic that's, you know, coming in the future. But as it stands right now, it's going to, you know, monitor your, that's why these files are so big. It monitors everything, every tick movement from the time you get in. Let me go back into it again. From the time you move in, get in, let me go back to the end here. So you can see we're not even in a position here. And let me just jump down. So now here, where's my entry? Let's go. Let's find an entry. There we go, right there. There's an entry. So this is where you first get in. You entered short, and you could filter these, of course. You know, turn on your filter and you want to see what they are. But in any event, so there's a short. So from now we're in, and there's the price movements and so on. And this is what it's done. And this is where it's at intra trade. And there's your MFE. And let me do one more thing. So we're going to do this. Let me freeze my top row. There we go. So let's come back here. There we go. Okay, so now you can see from the row. And now you can see that this is all pre-trade. And then you could see that you got in because all the moons aligned and everything based on your settings aligned. Here's your ongoing intra-trade MAE, FAE, and ETD. And there's your trade grade at that point, or your, you know, P&L at that point. And then you go in further, and then, you know, this is what happens inside of the trade. So the question is that, you know, if conditions are changing, you might want to do something, and that's where this is going. So it's I can't really call it AI because it's not intellectual. What is it? Artificial intelligence, because it's not going to be that artificial, but in a way it really is. But all that logic is going to be built in. So that's coming and that's future. So anyway, so then it just keeps going until the very last row, which is down here, and that's where you get to your exit. So if you just wanted to see all the trades, you can go to position and you could say get rid of all the NAs, get rid of the NAs because those are no positions, those are pre or post. You only want to see, well, it looks like in this case I only did 2 shorts. This is intra-trade, the short. There's the entry and there's the exit. So if you just wanted to see the entries, you can see there's all your entries right there. And then if you want to see all the exits, which will show you everything, there's the exits now that it has the information. And if you want to see intra-trade, there's intra-trade. So, so that's where that's all going. So, okay. So that's that. And then, as I say, just watch the videos on the other one for that information. Okay, let's finish this up with one last section. Okay, last but not least is we took as these right here. And I can cover all these together because they're all, this is all just defaults for Ninja. So this is the chart that I'm using. So it's kind of nothing. This is the account that I'm going to be trading on. And this is a label that I have. And of course I change that, you know, based on my skew. Wait till flat. Yeah. It won't take another trade on top of another trade. I'm going to be adding logic for add-ons, but right now it's wait till flat. And then obviously you could enable it from here just as you could down here. I guess I could turn it off. And then historical data and how it's handled. I wouldn't play with any of these. And then good till close. So this is all your standard NinjaTrader settings for strategies. So that's why they don't have groups, because they're really not mine. So that's really about it. So I think that covers all my settings. Okay, I think that's it.